If you collect silver instead, and then follow the gold-silver ratio, and then convert to gold, down when it drops to 20 or below, you'll be getting 4-5 times more gold than you paid for. And that's been my strategy, and it's working out really well so far.
Absolutely. From Gold Telegraph, Federal Reserve Bank of New York president says central banks must prepare for the unexpected. In moments of disorder, remember, gold shines the brightest. So what he's referring to here is a speech from John Williams, president and CEO. Prepare for the unexpected, and basically he says that the Federal Reserve and central banks more broadly have faced unprecedented crises in the last 20 years: Euro crisis, Russia invading Ukraine, COVID-19, all these different problems, and so they can't forecast what's going to happen next. Absolutely anything could come. And so they need to be prepared to use absolutely every tool in their toolkit, including the most extreme emergency measures. So prepare for the unexpected. And what does that mean for individual investors? Probably hold gold. That's how you make it through all of these crises.
The speculation is that China really has maybe double the amount of gold that they report. The amount of gold that goes into China, it's all very suspicious, and we know that basically they lie all the time. And you can see it in the chart where the gold stocks take these sudden jumps. They don't report, or they report that they didn't accumulate any. And then they said, oh, yeah, well, we actually did.
Yeah.
Okay.
Yeah, I've seen estimates ranging anywhere from 6,000 tons in China to 20,000 tons. And the U.S. has, officially about 8,000 tons. So possibly China has more than the U.S., possibly not. We'll see.
There's a whole bunch you can go to the World Gold Council and you can get a report on how much gold every country holds. But that isn't as important as how much gold per citizen. If you are second place to the U.S., but you own all your gold yourself, and there's 330 million that have to share it in the U.S., then you're the richest, not the U.S. It isn't the total number of ounces. It's the ounces per capita that counts more. And the U.S., I think, places, where was it, like number 12 or something, isn't it? I can't remember what it was.
I can't remember the number, but it's not number one, that's for sure.
Right.
Yeah, and the thing to remember is you can do that yourself. Think about how many ounces you have per person in your family, right? That's a number that matters probably even more than your own country. So,
well, if you've got one, you've got more than the average. That's also important. And
when comparing nations by gold, the absolute tonnage is less revealing than the ratio per citizen. For example, even if China held more gold in total than the United States, the U.S. still ranks higher in ounces per person. That metric more directly reflects the financial safety net behind each citizen. In the U.S., with over 330 million people, the federal hoard is divided by many, lowering per capita weight. For individuals, the same logic applies in micro. Owning more precious metals per family member gives you a meaningful edge in times of crisis.
If you collect silver instead, and then follow the gold-silver ratio, and then convert to gold, down when it drops to 20 or below, you'll be getting 4-5 times more gold than you paid for. And that's been my strategy, and it's working out really well so far.
Absolutely. From Gold Telegraph, Federal Reserve Bank of New York president says central banks must prepare for the unexpected. In moments of disorder, remember, gold shines the brightest. So what he's referring to here is a speech from John Williams, president and CEO. Prepare for the unexpected. And basically he says that, the Federal Reserve and central banks more broadly have faced unprecedented crises in the last 20 years: Euro crisis, Russia invading Ukraine, COVID-19, all these different problems. And so they can't forecast what's going to happen next. Absolutely anything could come. And so they need to be prepared to use absolutely every tool in their toolkit, including the most extreme emergency measures. So prepare for the unexpected. And what does that mean for individual investors? Probably hold gold. That's how you make it through all of these crises.
Yep. Gold and silver. Silver is more volatile, but on the onset of a crisis, it can fall like it did in 2008 and just like it did in the COVID crash. But that's just another opportunity.
Exactly. Hold a little bit of both.
Just know that if there's a big crisis and things are going south for everything else, eventually gold and silver turn around and go north.
Yeah, that's right. Also, from Carl B. Manger, it took the U.S. 100 years to do what the Roman Empire did in 250 years. It's not looking good, folks. Yeah, and what he's talking about is currency devaluation. So we are here. We're this green line. This is the U.S. dollar losing its value precipitously, even faster than Rome lost the value in the silver denarius. So we're debasing.
Okay, there's some dynamics going on here. When in the Roman silver denarius, this is currency that's in circulation. And the only way to debase the currency supply was to take in coins in taxes, melt them down, and add copper to the silver. And eventually they just became a copper slug with a silver wash on it. Like, all of our coinage today looks sort of silvery colored, but we know it's just a copper slug.
In a recent address, New York Fed President John C. Williams urged that central banks must prepare for the unexpected. He noted how in recent decades, policymakers have faced crises they never anticipated, from pandemics and wars to financial upheavals. In such moments, liquid safe assets like gold provide refuge. For private investors, this means allocation to gold and silver is not speculative but strategic. While silver can be volatile, it often rebounds and delivers leveraged upside when confidence in fiat weakens.
That green line, that's a national fiat currency, and we've got a printing press and a keyboard. And so you can actually dilute the entire... When you had coinage, say you were able to take 3%, or how many coins were pulled out of circulation in taxes at any given moment and were not out in the public circulating, maybe 1% that they get to melt down and do deficit spending, dilute. They take 1,000 coins in, they dilute it with 50% copper, and they can spend 2,000 coins. And so they're deficit spending just like we are today, except they're limited to how many coins they can actually melt. They can't dilute the entire currency supply and debase all of those coins that aren't in the government possession during the time of while those coins are going through the taxation before they get spent. With fiat currency, though, you can just type, like Ben Bernanke did, just type $1 trillion or $2 trillion into existence. And, one of the people that I've been able to interview, that was back in 2023, is Joseph Wang, and he was the chief trader at the New York Fed. So he is the one person on earth that has been able to spend more dollars than any human ever in history. He got to spend, he did those QEs. So he got to spend trillions of dollars. And the dollars he spent were made up when he typed them into existence. They didn't exist until the moment his fingers hit that keyboard.
Throughout history, empires have destroyed value in their currency by diluting metal content. In Rome, silver coinage was repeatedly melted and mixed with base metals to fund deficits. Today, fiat currencies can be debased via printing new money. If a government doubles the money supply, prices tend to double, having purchasing power. The U.S. has faced this modern variant. Trillions of dollars have been typed into existence during stimulus cycles. In contrast, gold cannot be conjured at will, giving it a natural role as a check on currency dilution.
Yeah, it's incredible. We've got new technology that allows us to debase like never before.
Right, but it would be like if the Roman government was able to change the silver content in all of the coins in circulation simultaneously. We have the ability to do that devaluation. If you want to devalue the dollar instantly, just double the quantity. And if you want to devalue 50%, double the quantity. Prices will very quickly adjust. If you double the quantity and put it out in circulation, prices will double to compensate for that, and therefore the dollar will have been devalued by 50%.
Exactly. And so the big takeaway when we look at this is what happens next. You're so close to
Right.
zero. There's not much further to fall. So take care of yourself, people. Take care of yourself.
Yeah. Well, this causes the rise of dictators and the fall of empires.
Exactly. Jeff Park asks, has there ever been another time in history when the government broke and everyone else got rich? There's a lesson in there. And George replied, when Rome debased its currency, the senators hoarded gold and land while the empire burned. Same playbook, new costumes.
Yep.
Exactly.
In turbulent transitions, like the fall of Rome, the collapse of Bretton Woods, or revolutions, gold has often surged. Intellectuals argue that rising gold prices are not only indicators, but catalysts of systemic change. Elites arm themselves with bullion and land, while broader society is squeezed. Today's relative silence on this shift is striking. We may be witnessing a historic transfer of wealth, one that shapes the next monetary order. In past crises, as currencies failed, gold became the real currency that outlasted regimes.
I don't have that much to comment there, but you can just get on the same side of things. You just got to protect yourself because you're not going to be able to do anything about the way the government operates. And we as individuals are not going to be able to turn this around. All we can do is try to benefit off of it for ourselves and our loved ones.
Yep. Hold real assets and we'll be part of the rebuilding process.
Yes.
Yeah. Arnaud Bertrand says, I was studying other times in history when gold prices more than doubled in the reserve currency of the time, as they did in the past year. It's rare and almost always a sign of a profound loss of confidence in the existing monetary and political order, going all the way back to the Roman Empire, the so-called crisis of the 3rd century. And it often marked the transition from one era of power to the next. The fall of Rome, Spain's decline from world power, the French Revolution and Terror, and the end of Bretton Woods. Interestingly, it's often actually as much a cause as a sign of these episodes. And this is effectively a transfer of real wealth from the poor to the rich elites who protect themselves with gold. This being what ignites the political upheaval. The weird aspect of the current episode is the relative silence around it. We're witnessing what may be one of the great pivotal moments in financial history, yet it's barely being discussed.
Yeah, well, it's been my mission all along is to save the middle class, one investor at a time, before a major financial crisis. And Ben Bernanke did not let the last major financial crisis play out to its end. He papered over it, creating a very weak foundation.
What's the takeaway for today's investor? First, hold real assets, physical gold or trustworthy equivalents. Second, diversify with silver and trade the gold-silver ratio when appropriate. Third, don't expect to change the system. Protect yourself from it. Fourth, watch for inflection points when markets creak or political tensions sharpen. Finally, maintain a long horizon. These are not bets, but insurance. As economies strain and deficits balloon, those anchored in tangible value are better positioned when the next storm arrives.
For the rally that happened afterwards, which is all a fake rally the entire stock market, everything that has gone on since 2008 is built on weak and shifting sands. I believe there's a high potential that the top of the markets are in now. And Presidents Trump and Xi are this game of chicken that they're doing with the world economy is very dangerous, and that may have triggered. I've said that this is the spooky month, that we're in October, that this could be the beginning of a crash. And I think that it's very possible that President Xi, all of the rare earth exports to all of the countries on the planet, which can just cripple economies all over the world, Trump's response with tariffs. But right now, it seems like every single day, there's some executive order that just upsets the world economy. And you can't have an economy. I mean, people need to go back and watch my video on the scale of these bubbles that we are in. If you prick these bubbles now and they start to deflate or implode, I think we could have one of the greatest crashes in history. And if this is accompanied by China actually stopping their exports of rare earths, we truly could, like Elon Musk once said, that it's entirely possible for us to fall into a modern dark age. And that could be, I mean, the range of possibilities, of probabilities, there's a bell curve of probabilities and a range of possibilities. But it's possible that we could be headed for something really, really bad. But I do believe that there's a crash out there. I believe that it's going to be a big one. We're looking at this same scenario playing over and over again.